Okay.
All right, I'm going to start the recording.
Thank you, Camille. Okay. So good evening, everyone, and welcome to this special meeting, the special board meeting of the Glen Cove IDA. Today is Thursday, April 8th. It is now 6:01 p.m. And I am the chairman, Tim Tankey, and we are holding this meeting via Teams and conference call. And let us officially begin this meeting and call it to order at 6:02 p.m. And will the secretary please call the roll?
Ian Postarica,
Here.
Dave Jimenez,
Here.
John Tetta,
Here.
Jim Capiello,
Here.
and Chairman Tankey.
I am here.
As we stated, Vincent Hartley and Joe Giuino are absent.
Okay. Will the secretary report on the notice of special meeting?
The notice of special meeting was conducted in accordance with the IDA bylaws and Executive Order 202.87.
Thank you. I make a motion to approve the minutes of the IDA GICLIC joint meeting that was held on March 23rd, 2021. May I have a second? Now you guys are gonna have to step
Second.
up because Vincent is not here today.
Yeah.
So.
Second by Ion Pushpurika.
Who seconded that?
Ion Pushpurika.
Oh, thank you, Ian. Will the secretary please poll the board?
Sure. Ian Postarica,
Aye.
Dave Jimenez,
Aye.
John Tetta,
I vote aye.
Jim Capiello,
I also.
and Chairman Tankey.
I vote aye. Under new business, the purpose of tonight's meeting, tonight's special meeting, is to hear from Georgica Green, LLC, for the extension of a pilot to match the 30-year term of their financing. Tonight we have Millen Tyler, the Glen Cove's IDA legal counsel. I believe Dave Gallo is joining us from Georgica Green Ventures, as well as Dan Deegan, counsel for the applicant. Before we begin, I just want to make a quick announcement. Before the board hears the presentation from the applicant, I would like to remind the board members of the IDA's ethics policy that if any board member has a potential conflict upon the review of the project application, it should be disclosed to the ethics officer, Vincent Hartley, or to the governance committee, which I am the chairperson, or the IDA legal counsel in advance of for advice on the disclosure. Having said that, I'd like to now turn this over to Millen Tyler to provide the board members with an overview on the request by Georgica Green Ventures. Millen, it's your show.
Thank you, Mr. Chairman. By way of a quick background, this is the 100% affordable rental project down at the waterfront. This application is from Georgica Green, not RXR. I think there's often confusion when we say waterfront. People sort of assume that it is RXR. And in fact, I found out today RXR wasn't even aware of this. So this is Georgica Green, a well-known, reputable, affordable housing developer. As maybe the new members are not aware, this site already has a 20-year pilot in place, approved in 2016 by the board as part of the waterfront development. The developer has since come back to the IDA requesting sales and use tax and mortgage recording tax exemptions, which were approved. So what is now before us, as the chairman said, is a 10-year pilot that would start the day that the existing 20-year pilot expires. So we just call it an extension, but it'd probably be a standalone pilot because the numbers are probably going to be different than the ones that are currently in place. And again, we can certainly hear from the applicant, but the rationale for approving this is that the developer's lender has required a 30-year pilot in terms of their underwriting and as set forth in their term sheet. I guess one more comment that...
Second, Millen, Well, I just
Yep.
want to ask everyone, if you're not speaking or if you don't have the intention to speak at this time, just put your mics on mute so that there's no interruptions. I would just appreciate that. Thank you.
Okay, this is just a preliminary resolution. As the members are aware, doesn't bind the IDA, but it only indicates that there is enough interest in the project or the request to go forward. So if it is in fact approved tonight, it would still be subject to a public hearing, at which time the public would be able to comment on the project and the financial assistance, and the completion of due diligence by the staff and council, all for presentation back to the full IDA board for a real approval, if you will. And we are currently hoping to complete all of that if tonight is approved, on May 11th. So with that general background, Mr. Chair, I guess I'd like to ask Dan Deegan to introduce himself and his client and give us an overview of the project, and then maybe open it up to questions. Dan?
Thank you, thank you, Millen. Can you hear me?
Yes,
Can you
yes,
hear
we
me?
can hear
Yes,
you.
okay,
Yes.
okay, good. Good, good. All right, so, and thank you, Chairman and members of the board. My name is Dan Deegan with the law firm Porcelli Deegan Tirana, the attorney for the applicant. We also have on at the meeting, as referenced by the chairman, my client, representative from my client, Dave Gallo. Dave, are you there?
I'm here, Dan.
Oh, you are
I'm
there.
here.
Okay, good.
Yeah, I'm here.
Just making sure. Okay,
Yes.
good. All right, so thank you very much. By way of background, I understand there's some new members on the IDA who obviously are the waterfront, but just to kind of supplement what I did, I don't want to say criticism, but one of the concerns about the waterfront was that what would be considered luxury housing or upper middle class housing. And it's been very successful. I believe everything we're hearing is that those units are renting up pretty well. The for sale units are selling pretty well. This particular parcel of property was slated by the city and by in agreement with the developer RXR to ultimately be made affordable, 100% affordable. And what that means is that the project, if as and when built, would ultimately be affordable to people who are making between 50% and 130% of the area median income. And that AMI really applies to all of Long Island, not just Glen Cove, but it's the area median income. So, and there's very strict regulations in place to make sure that only those people that qualify ultimately can live and be part of ultimately, a very beautiful community, not only Glen Cove, but in particular the waterfront down there. So the idea is that this is the affordable component for the entire waterfront project. As Millen indicated, we are not RXR. This is not RXR application. We are contract to buy the.
Dan, we're losing you a little bit. You're coming in and out, Dan. Can you hear me?
Yes, I can hear you.
Yeah, you're breaking up a little bit, Dan.
You
may want to try turning off video and just going to audio.
Yeah, Dan, turn off your video. Maybe that'll shrink your band that you're using, and try it that way.
Yeah, is that better?
Yes.
Is that better?
Yes, Dan.
Okay. How much did you? Okay, good. Well, I'm not sure what you guys picked up or what you didn't, but basically the description was that
I'm not hearing anything.
Yeah, Dan, we're not getting.
Yeah.
It's really breaking up. We're only getting bits and
Okay,
pieces
call right
of what
back.
you're saying.
Hold on.
Dan, is there a way you could call in on the phone and do it that way?
Yes, that's what I'm going to do. Is this getting any better or no?
Audio's better.
I can hear you now, but I don't know if it's going to stay
I'm
that
getting
way.
closer to my Wi-Fi. I'm
Okay.
getting closer to my Wi-Fi router, moving up 2 floors of my house. Okay, can you hear me now?
Can hear you.
Yes.
Okay. Okay, good. All right, so I'm not sure which part we left off, but which part you guys heard or didn't hear, but basically this portion of and this parcel is the affordable component of the entire waterfront. Did you guys hear all that part or no?
Yes.
Yes, we heard that.
Okay,
but
good. Okay.
It's the sale from RXR where I think we started to lose you.
Yeah, okay. So, we are in contract to purchase this property from RXR. And before we ever entered into that contract, the 20-year pilot that currently affects the property was already approved by this IDA back in 2016. So we're, initially we thought that, that 20-year pilot and the terms of that pilot would be something that we could work with as we went out to seek our financing. What people should understand about affordable housing is, and the way that this project ultimately gets structured, is that there's tax credits that are issued, ultimately by the federal government, by the state. There's conventional financing, and then there's various grants that are out there. So basically the challenge of the developer is to cobble together the various funding sources in order to make the project at the affordable rents work. And initially, and everyone knows over the last year, that the whole world's turned upside down with COVID. The construction costs have gone up. There's been a lot of different challenges that affected things, but the financing market in particular has evolved. And at the end of the day, the state programs through HCR require that ultimately a pilot agreement be coterminous with the financing. And the financing, in turn, as it's turned out, needs to be a 30-year financing. Attached to the package to the board, there's indication from our proposed lender and also from the HCR guidelines that set this out. So the challenge is that while we kind of inherited a 20-year pilot, our 30-year pilot is required. This is, very consistent with what's done, across Long Island. I would say with the overwhelming majority, if not all, affordable housing projects have 30-year pilots associated with them because of this 30-year financing that's coterminous with that pilot. And, in order for this project to work and for us to deliver what ultimately, the city and everybody wants, which is this affordable component, we are going to require this to be a 30-year pilot, which in effect, as Millen indicated, is really a 10-year additional pilot from what's already been granted and in place. I don't know. So Dave, I don't know if you have anything to add to that or we can take some questions from the board.
Sure, yeah.
But Dave, I'll turn it over.
Sure, I think it's just worth mentioning. I mean, I want to thank everybody, if you can see me, thank everybody for the special board meeting, chairman, board members, thank you. We've made a lot of progress and we're right around the corner, in fact, from closing and beginning construction on the project. I think, Dan, the only thing I would add is that the property will actually have a 50-year regulatory agreement. So it's not as if in year 20 or 21, the units will have, gone off of the affordability. The affordability is going to run 50 years. This was a tweak that was made, and we're working to stay consistent with as you said, with the financing. But just so everyone's clear, the property will remain affordable even longer than this pilot will run. If we do get the extension from years 20 to 30, the property will actually still remain affordable from years 30 to 50. So it's the only thing else that I would add, but certainly here and available for any questions.
Yeah, this is John Tetta. I'm curious, I guess, from Dan and Millen, how often does a lender dictate to the borrower the length of a pilot?
I guess we can both answer. I guess I will go first. Certainly for affordable projects, it doesn't surprise me that the lender is requiring this. And quite honestly, I've been on the phone with the lender's counsel. So it's a matter just of the underwriting. And
right.
with a 20-year pilot, the bank or the lender has to make some outrageous assumptions as to what the taxes would otherwise be. and therefore, the numbers just don't work. I think I've seen that on a number of projects, quite honestly. There's a couple of others that are, coming before the board now where the financing dictates how long of a pilot it would be. So I guess, John, in my experience, it is fairly common. And again, it's a matter of underwriting, especially quite honestly on Long Island with multifamily rentals. I see it very often where the lenders will, say, I can't underwrite this without a pilot, and I'm only going to have my loan term or my amortization has to match that loan term so that I know that my loan is paid off when bad things happen. Dan, I'm sure you can add some
Yes.
more examples or color.
Well, yeah. So the other thing I was going to say is that, the reason why it drives the pilot and why the lender's driving that is because ultimately the rents here are controlled. They're artificially depressed below market rate. So the project operation will afford to make those payments. The longer you stretch out the term from 20 years to 30 years on a mortgage, the lower, just like a home mortgage, the monthly payments go down, and therefore it can, the project.
Yeah, you're bouncing around again, Dan. Basically, my understanding of this, John, Dan, you're bouncing around again. We're losing you. You're coming in and out. But my understanding of this is this basically stabilizes the repayment on the loan for the full length of the original amount that you're borrowing. So that the taxes and the pilot will end at the borrowing and the pilot will end at the same time. So there's some stabilization to the numbers for the bank to issue their financing. Is that correct?
Yes, Mr.
Yeah.
Chairman.
I'm sorry. Go ahead. Well,
No, I agree with everything the chairman just said. It's a 30-year loan, 30-year pilot. The bank has sort of made it clear, and HCR has made it clear that the pilot has to be coterminous with the loan.
Yeah, it gives some stabilization and some guarantee to the bank so that they know, like you said before, after year 20, when you still have 10 years left on your financing, that the taxes are basically, they know what they're going to be for the next 10 years until the mortgage payments basically, or the financing is done. So that's why they would like to see it run concurrently with the pilot agreement. And I understand that, I think,
Yeah, I can understand it, but I'm not really, overly concerned, with how the banks and the lending institutions right now are making more money than they've ever made because paper's never been better because they're a lot more stringent on how they loan their money out now. So, I think the original units and the original proposal, what were they going to rent for?
Dave, do you want to speak to that?
I don't know what the rents haven't changed, John. The rents, the anticipated rents are still the anticipated rents that we're working on now. And I think it's not so, we have a lender that has 30-year money at risk. They're saying in year 21, how do we know if the property has to remain affordable past year 20? How is it that we could have confidence that the loan can be repaid? It's just there. I mean, the interest rate that we have is very competitive, probably below market. I mean, we're given the affordability. We have, pulled the financing together in a very, very strong way. In addition to that, with the state also has obviously the majority of the dollars committed in the deal. When we've submitted for financing in the application, we structured it so that we had really 15-year and 20-year money in the deal, not going at risk for 30-year. Unfortunately, the state can change basically the pots of money that are ultimately funded along with the project. So we're just, as we're getting closer and we're getting, to the finish line here. This was something that had come up, and we presented the material to document it. The rents won't go up. This doesn't change in any way any of the fees that Georgica will earn. It's just when you've got affordability that runs 30 years, or in this case 50, if a lender's got committed dollars, they want to see those dollars can be repaid without their risk of the pilot.
Yeah, and Dave, ordinarily, I would say that okay, you know, we could be a lot harsher on a pilot, but this is really something that Glen Cove absolutely needs. This is an affordability factor that we don't have, and it's missing. It's a huge missing item in our city, that we have affordable housing, especially new construction that is coming in and is an affordable you know, starting point with this. And I think for 50 years, that's why, you know, I would support I support a project like this, because it is something that's so needed within our city. And
So is
again,
this-
go ahead,
so-
John.
Yeah, I just have a follow-up. So is this commercial lending or is this private?
Oh, no, it's commercial lending. So it's commercial lending. It's not, there's almost no.
So BlackRock
dollars.
not involved in this or anything like that?
No. Barings is the permanent lender, but it's when you say like private equity dollars, it's not looking like there's not some fund behind this. It's a conventional mortgage lender. Matt Ardito's on the line, can tell you the rate. I mean, ultimately, it's basically we had went in with the Freddie Mac rate originally. Freddie's an affordable lender. The majority, you know, when you look at the debt to equity, and equity being the tax credit equity, because there is no investor equity in a project like this. It's 100% financed, like Dan had said, with multiple sources of funds. Nassau County, obviously the IDA contribution, federal, state housing tax credits, which are ultimately sold. In this case, I think, don't recall who the investor is, but there's no investor equity like a private equity fund, and this is strictly just to mirror the bank's debt along with the pilot. So in year 21, the state also has a vested interest. They don't want to see between years 20 and 30 the ability for the property to come out of the affordable housing. So there's a 50-year regulatory agreement. Their money's in, the state's money's in for 30. They don't want to see the property not be able to pay its debt due to an increase in taxes in those years, which ultimately would take the property out of the affordable housing program.
So if you had to put a percentage on additional cost to build at this point, what would you say it is?
Are you saying due to like lumber increases and things like that,
Exactly.
or?
Yeah, raw material.
$2 million.
Raw material at this point, I mean, I think, so we're in and around, I guess, a $20 million build. I'd say in the last, 6 months, we've seen between 500 and 600,000 in increased costs. Fortunately, Nassau County, has been able to cover some of those, and we're going to have to, as a company, eat the additional costs. We don't get necessarily any more money for building, the affordable housing. We had this particular project was probably funded in the toughest, most competitive housing round. I think we were the only project funded throughout Nassau, Suffolk, within this financing, actually even further. So last year was a tough year to get housing dollars out of the state. We're very fortunate we were able to do it. And we're just, many will say in affordable housing, we have a lot of masters. We do, starting with the IRS, which the program's created from. But ultimately we are where we are, and we're just trying hard to get shovels in the ground. And this came up, and we disclosed it early that the lender and the state were looking for this, and we hope that,
Well, why don't we
Why don't we look at RXR for some of this? Since they were the ones that committed to the project
Who's talking?
at the
Wait, who's
beginning
talking?
and
committed to
commissioned
these
these units. They want to sell the part of it to you. Then you should look to them to backstop this, not the city.
Who
The
is
city's already
speaking?
backstopped the whole thing.
Who is speaking?
Ray Krupka.
Who is that?
Ray Krupka.
Ray, you gotta be called upon before you just start yelling out, okay? You have to indicate that you want to speak.
Thank you.
Okay.
Okay, Mr. Chairman, this is Dan Deegan, so I'm on the landline, by the way. So one of the important things to know is, we reference these various sources of financing, and, between the county, the state, and the federal government, they are looking to see that the local government is also a participant and a partner in this. So, and the way that that's typically shown is through the zoning entitlement process, which has already been done here, and through a pilot agreement. Every affordable housing project on the island has a pilot agreement. If these projects, by their definition, can't pay full taxes, or else they're not going to be affordable. You can't. The rents that are going to be collected here, which are regulated, they can't be changed by the landlord or by the developer. They're regulated. That's the set of financing and income that is going to be set for the next 30 years. So,
can I ask a question? Millen, did Kevin Grims look at this?
You asked to talk? Yes. Thank you, Mr. Chair. I was going to add that. And by the way, Dave, I think the tax credit investor looks to be Raymond James, and TD Bank is the construction lender, with Barings being the takeout. The answer to your question is yes, Mr. Chairman. And so Kevin Grams at National Development Council, we asked him to look at what this project could afford by way of a pilot in the years 21 to 30. And he's done an initial analysis, which I think has been shared with the board. So in short, the pilot payments in year 21 would almost double from what they are currently in the 20-year schedule to the formula that Kevin Grims has suggested, which is 10% of quote shelter rents. So if this goes forward, that is most likely the pilot schedule that we would publish. And again, for Mr. Krupka and or other members of the public, this isn't the public hearing, but there will be a public hearing. There will be advertised, et cetera, at which time we would take all public comments.
Yeah, hold on one second. I think somebody's typing with their mic open, and it's coming across. Yeah, Mr. Krupka. Okay. I was just gonna address him, saying this is not the proper forum for public comment at this point. We're just, we will have a public hearing on this. The public is invited to listen in on this process, but there will be a public hearing before any decision is made. I don't want to make sure that that's clear. I thought we made that clear at the beginning.
I tried to, and I apologize if I didn't. And again, for the public, at the public hearing, there will be a transcript and notes taken of all the comments. And to the extent that any board member is not able to attend, they will be given a transcript of all the comments. So correct. I can assure the public that the board members will at least hear or read each of the comments before they make a final decision on this or possibly any other matter involving financial assistance over $100,000.
I also just want to make sure that it's clear tonight to the public that there is no vote tonight on this. There's no decision. This is really a preliminary type of a meeting or a conference or a hearing, just so we can get the information that reflects on what the applicant is seeking, and that the board members have a chance to hear that and then to reflect upon it before there is a vote. And that's really the purpose of tonight's meeting.
Agreed. This is only a preliminary resolution. So while it is a vote, it is true that a binding vote would only happen after the public hearing and additional due diligence, staff review of all of the materials, then and only then would we come back to the board and ask for a final binding vote.
Correct. This is basically the resolution tonight is this to whether or not the IDA wants to take preliminary action towards a final disposition on or a granting of the additional pilot at some later date. I think it was May 11th we're talking about. So, all right. Does anyone else here have that's the board members or our applicants have any other comments?
Yeah, this is Jan Pushparik. I think what would be helpful to the board is if we can get access to the specific requests from the lending institutions. Based on what was said here today, my understanding is that what they're looking for is not per se an extension to the pilot, but they're looking for risk management. So I think what we need to do is step back and, think about, is there another way we can provide the lenders with risk management that's acceptable to them? Again, I think the project is great for the city. I'm all for supporting it, but before kind of like jumping and extending the pilot with amended terms, obviously, because otherwise it wouldn't make sense. I think the analysis done by Mr. Gramsci, it's excellent. So that's a point we need to keep in mind. But I think it will help us if we look at it from a more comprehensive perspective.
Okay,
How can we get this done?
If you looked at the package that was sent from, and part of that package was part from Barings, their financial institution that they're seeking from. There is some information within that document that indicates that they are looking for what they're looking for on this, and you should take a look at that, Ian.
Sure.
Okay, and there's that information, and I know that Camille and Ann have sent out. There's the NDC report from Kevin Grims, and there's other things. And if you need any other information with respect to this application, please don't hesitate to ask. We will send everything that you need to make your decision. So, Millen, is there anything else we can provide to him? I mean, you sent over the stuff that was in the packet, which I believe was at least helpful in understanding where we're going with this.
I think that's just about everything we have so far. But my suggestion is, Ian, again, this is just a preliminary resolution. My suggestion would be, take a look at what was sent. If you need more information, we can certainly provide it, whether it's a third-party report or getting something from the developer or the banks. I'm happy to work with you on all of that because I think it is a relevant question. And, I applaud you for asking the question, and, we'll get you all the information that you need between now and the time that you're being asked to cast a binding vote.
No, and I appreciate it. I mean, John Teta and Ian and all you guys, you're asking the right questions. You're asking the right questions and to see if we can do something, other than just, extend it automatically. But there has to be reasoning and basis for the extension to the 10 years. And I think that's what Dan Deegan and Dave Gallo are trying to provide us this evening, is with what they're facing as far as for the financing.
Yeah, and believe me, that we do not come here lightly. If we didn't need this to make this project work, we wouldn't be back here. This is absolutely necessary, and that's why we're, but obviously you guys have to have the information required to make the decision, and hopefully you will have all of that if you don't have it already.
I appreciate that,
Great,
Dan.
thank you.
All right. Are there any other comments, questions? I mean, this doesn't end just because we closed the meeting tonight. This is always open for continued research and exchange of information between the applicant and the board members as well. So if you need something, please don't hesitate to ask Millen, Ann, myself, we can get it from Mr. Deegan or Mr. Gallo, whatever you need. So,
Mr. Mayor, I have another question. And it's,
sure.
I appreciate the cost overruns based upon what you just said, were roughly 5%. I have a funny feeling they're going to be, the cost to build is going to be a lot more than 5%. And I'm concerned that it's the town or the city's going to get a skinny version of the original proposal. How do you feel about that? Am I way out of whack or what?
Well, and Dave, you can answer this, but I know that HCR has very strict standards. First of all, the reputation of this developer, Georgica, is excellent, and there's always an outstanding invitation for anyone to go look at some of their other projects. But their reputation, number one. But number two, the regulations require there's architectural standards that have to be met, and if anything, this is going to be a very high quality building. It's going to be an excellent place to live. And, if it's anything other than that, there's going to be, be a violation of the standards that the state imposes upon this type of housing, and certainly would be contrary to the track record of this developer.
And I can add this, Millen. The quote plans and specs are incorporated into the IDA documents. So what they promise to build is in fact a covenant. And if they, as you say, give us a skinnied version or cut corners, well, then the IDA can say that the developer is not living up to their obligations and, start imposing penalties or withdrawing things, et cetera. So in addition to the reputational risk and, the tax credit and other obligations, just looking at it from the IDA's perspective, we also impose that same obligation to build exactly what they promise.
Dave, you're muted, Dave.
Of course I was. Sorry about that, Chairman. And to answer the question, we take that very seriously. There's no intention to alter or change the project, skinny it down. We've, in the last year, we've continued to complete projects. The appliances have gone up. Things have gone up over the last year. We will not change what we promised to develop and build. That's not who we are. And we look to bring that same value here. And no matter what, the project that we've presented, the project that we've presented to city planning, the project we've presented to the IDA, the project that we've presented to the state will not be changed. I feel confident that we have what we need. The change from years, this particular impact from year 20 to 30 is not providing any additional debt or additional dollars to the project. It's getting the lender comfortable that in those years the affordability and the debt repayment will remain the same. I feel as confident as ever that we're going to develop the project and deliver it exactly the way we've intended to the city, to the community, and to everyone else that's invested in the project.
No disrespect intended at all, but the IDA really, I'm speaking for myself, isn't overly concerned with the comfort of the lender. Speaking for myself. So.
No, I know. You know what? I fully understand your perspective, and I hear you. It's not just the lender; it's the state in this case too. It's both the funding that we ended up receiving from the state is the state has various buckets to pull dollars from. As a developer, we make requests, but ultimately things can change as you submit applications. So we're dealing with it, and I hear you and I understand, and I think you're right. The lenders, in this case, TD and the construction, they'll earn their fee, but this is merely just in actuality really preserving the affordable housing. It's making sure that in year 25, if I don't have an ability to increase rents, but the taxes have went up, how does the building survive from a debt service coverage? Now, one could argue that a lot could happen over the next 20 years. I fully agree. But the property is going to remain long-term affordable housing. I am going with the team at Georgica. We're going to deliver a really, really, really great project for the community. This is just a little bump that came up, and unfortunately, we're dealing with it. We wanted to get in front of it. We talked with Millen and Kevin Grams and everyone else about it as soon as it did come up, and we continue to do everything that we can do on our end to make sure that the project does break ground and does so very quickly. So, but I definitely hear you from the IDA's perception of the lender. I get that, but it's really about keeping the affordability. These projects are most, if we were to look at the capital stack, and I don't have it in front of me, they're 90-something% of it is financed with the state resources and local resources. Local being really the state in this particular case. The first mortgage is a smaller component of the project, but it is a necessary one. And in this case, there's also the state money that they've driven into the project, which is 30-year money. But I get, anything that you need from us, we're here, and certainly from the actual project delivery and the quality, we're going to deliver the project that we've always promised.
Okay. Thank you, David. Thank you, John, for your questions. And before we move on to the resolution, I just want to give one more chance. Anyone else who's on the board here have any other questions, comments, or anything for the applicant at this point?
Yeah, this is David Jimenez.
Yes, David.
Hey, my only question, because I see like the sheet, and I echo what Jan said, that, great presentation and everything. My only question is, from years 1 to 20, 2% escalations, I see it going up consistently, nice and easy. Year 21, it jumps a lot. And maybe, I'm missing something, but that also lends to a little uncomfortability with me, where it's jumping in 21 and then 22, 23, whereas if it was a 30-year pilot at 2% escalations, it would be a certain amount that just is less, quite frankly. And I understand things change and everything, but that would be something I would be interested to research more,
Well, maybe Millen can answer that question. Millen, why does it jump from year 20 of 80,000, 125 to about 160,000 twice, basically, in that next year?
And a simple answer is that the first 20 years are already baked in. They are part of the master tax agreement that was put into place in 2016. Okay. So what we looked at was only years 21 to 30. Right. And the question that we asked was, and I think this goes to some of the other concerns about this, what is the most that this project can afford, given all the financings? So I hear you that it jumps a great deal. And, we didn't have much choice. We could have made the early years of the quote new pilot lower, but the thought was that this project should pay as much as they can. Now, I mean, Dave can talk about how he's able to sort of smooth that jump over in his financials, but that's where the jump comes from. One is the years 1 through 20 is right under the existing master tax agreement. And then the proposal or the rationale that we started with for this pilot was, what can the project afford? And again, the number is 10% of shelter rents.
I got you. Yep. So that's an excellent question, David. Thank you for that question. And it's really important to point that out. So thank you.
And Millen, just to be clear, this is Ann. I mean, that's actually in the best interest of the city, that for the pilot that's being looked at for years 21 through 30, the amount of the pilot payments are actually increasing quite a bit compared to the prior year.
Right.
Right. And again, this is probably more complicated than we need to get into, but the master tax agreement money goes to the trustee and it goes into the bonds and there's the waterfall and all of that. This would be a standalone pilot. So this money goes to the affected tax jurisdictions. So for that reason, we wanted to make sure that the affected tax jurisdictions got as much as this project could afford. And, you know, and it may well be that the number that we are putting in is what the taxes might otherwise be. We don't know because we can't tell what the assessor would do 21 years from now.
Right.
But most importantly, so it may be a great deal, it may not be a great deal 21 years from now. But the important thing is that it lends certainty to the numbers, and that's what the banks need in order to do their underwriting. So this may not end up being much, if any, of a break for the developer, as much as it is definitely the certainty of the fixed dollars that we would put into the pilot if it's approved.
Correct. This is the stabilization that they were looking for. Yes. Okay, so that was a very good question. Thank you, David, for that. Thank you for your explanation, Millen. Does anybody else? I'll ask it again before we go, because usually it's at the last moment everybody comes up with these really good questions. So, but anyone else?
I just have to ask this question. Does this project not move forward without the additional pilot?
That's
They won't get
correct.
their financing.
Yep. And I can tell you on a call as recently as yesterday afternoon with the lenders, they've made it clear that they need a 30-year pilot. So, you know, at least from everything that I've seen and heard, including the commitment letter and the comments from the lenders' banks, the answer to that question is no, it does not move forward. But Dan and Dave can, you know, give their view of that.
Well, this is Dan. So that is definitely correct. And you Millen and everyone was talking about the actual schedule. So we have basically asked for these years 21 through 30 at a level that's sustainable by the project. And I think it is a good question. You know, is that the right number? We still have to do our internal analysis to see whether or not. I guess that's what Kevin Grims and NDC have come up with as their suggested level. So, you know, we are not absolutely saying as we stand here today that that's the number that we'll do. We haven't really seen that. You know, we've just heard conceptually what was being proposed. So, you know, that is something that certainly we work with, IDA council and staff to try and refine and make sure that it is something that makes this project workable. But
sure. I'm sorry, Dan, I would add, I know that the banks have not yet seen this schedule, and therefore they have not done their underwriting. So not only is it a matter of needing the additional 10 years, they then will crunch the numbers based on whatever schedule it is that we agree to with the applicant.
Right.
Okay. With that being said, we are.
Well, I just have a quick follow-up question on this point here.
Yes, Ian, go ahead.
Yeah, sustainability for years 21 to 30. So from the developer perspective, the schedule that was presented by Mr. Gramsci is sustainable?
Well, they have to look at it yet. That's what they were just saying, Ian. They need to review that and to see if that actually will work.
No, the bank has to review that. I'm curious if the developer is comfortable with that.
We haven't seen it, although we've worked with Kevin Grims on virtually all of our affordable housing, whether it's Nassau, Suffolk, towns or cities. So I feel pretty confident that he's proposing something that would ultimately be acceptable, but also in the best interest of the city, but keep the project
viable.
But we haven't seen it, so we look forward to receiving it. And
isn't this the increase? I'm sorry. Isn't that so, David? It's a pretty simple question. I'm not sure what else needs to be seen, but is the increase from 80,000 a year to 159,000 a year which is already in your schedule. So my question is, are you comfortable year 21 to 30 with 159,000 per year payment?
Yeah,
I'm sorry, I can answer that because Ian, I obviously was not clear before. The schedule that you have seen and are referring to, I have not shared with the applicant yet.
This is from us, not from them.
Exactly. I've advised them of what the formula would be, 10% of shelter rents. So obviously they know that there would be a big jump in year 21, but they've not seen the schedule yet. And I know their bank hasn't seen the schedule yet. So I apologize. I wanted the board to see it before, and comment on it before I shared it any wider.
Right.
Understood.
Okay.
All right, yeah, so that will be something that, once you get a chance to review it, David, at least from my perspective, I'd be interested to know if you're comfortable with it.
Yes, thank you.
Ian, thank you for that as well. Okay, I'm gonna move on unless there's some other comment or, okay. All right, so I'm going to make a motion to adopt resolution 5A, and I will read it. Resolution 5A is a resolution of the Glen Cove IDA taking preliminary action towards the granting of additional pilot financial assistance to Georgica Green Ventures through its affiliate Garvey's Point Workforce LLC and/or its other affiliates in connection with a certain project of the Glen Cove IDA and authorizing certain actions with respects to that transaction. All this means is that we are going to continue looking at this and move it forward from this point to consider it at our later date. So I'm asking for a second on this resolution at this time. May I have one?
I'll second.
That was John Tedder. Will the secretary please poll the board?
Ian Pusparica,
Aye.
Dave Jimenez,
Aye.
John Tedder,
I vote aye.
Jim Capiello,
Aye.
Chairman Tanky.
I vote aye. Okay, the motion carries. At this point, if there's no further business to come before the IDA board, I make a motion to adjourn this meeting and I ask for a second.
I'll second it.
Thank you, Mr. Tedder. I appreciate that. Seconded by Mr. Tedder. So will the secretary please poll the board members?
Ian Pusparica,
Aye.
Dave,
Aye.
Dave,
I think he said
Jimenez?
aye.
Aye.
Did he? Okay.
John Tedder,
I vote aye.
Jim Capiello,
Aye.
and Chairman Tanky.
I vote aye. I want to thank everybody. I want to thank the applicants, Dave Gallo and Dan Deegan for coming this evening, to the board members, to our executive director and Camille and Margot, I see was here as well. So thank you all for being here. I say thank you to the public for listening in. There will be additional public input on this topic before there is a vote on it. So I want to thank everybody for this preliminary beginning to this, to consider this application. So thank you all and have a good evening.
Good night.
Thank
It
you.
is now
Thank you. Good night.
7:55. Good night.
Good night.
Dave and Dan.
Good night.
Ellen.
Good night. Good night, Ann.
Ellen,
Bye,
thank
Camille.
you.
Okay, sure enough. Good night, everyone. Bye-bye.